All right, guys, welcome to today's Mortgage News Update. It is currently Tuesday, March 14th, 2023. And according to Mortgage News Daily yesterday, the average rate on the popular 30-year fixed mortgage has dropped to 6.57%. This is a significant decrease from 6.76% on Friday and a recent high of 7.05% last Wednesday. The lowered mortgage rates are a result of the yield on the 10-year Treasury falling to a one-month low after the failures of Silicon Valley Bank and Signature Bank, and the ripple effect that's now having following that happening throughout the nation's banking sector. For home buyers that are looking at a $500,000 home with a 20% down payment on a 30-year mortgage, this means a monthly payment that is $128 less than it would have been last week. Nevertheless, the rate is still higher than it was in January. So what does this mean for the spring housing market that's coming up? In October, rates surged over 7%, which caused a notable slowdown in home sales. However, rates started decreasing in December and were near 6% by the end of January. And that caused a surprising 8% monthly jump in pending home sales. Now, sales of newly built homes, which the Census Bureau measures by signed contracts, also saw a surge that was larger than expected. Overall, the current lower interest rates could definitely potentially drive home purchases up this spring. Agents and builders have reported significant slumps in home sales during February, potentially due to the rise in interest rates. And if rates continue to decrease, though, it is possible that buyers are going to end up returning to the market once again. And of course, this is certainly uncertain until we see how it all plays out. But according to Matthew Graham, he's the COO over at Mortgage Daily News, consumers' response to the recent banking crisis is ultimately going to determine if any lasting positive impact on rates will end up occurring. Inflation remains at a critical factor to watch, and the market awaits the latest report on inflation from Consumer Price Index. The Federal Reserve Chairman Jerome Powell really recently acknowledged that economic data has been stronger than anticipated, which could lead to those ultimate rate hikes in the future. While mortgage rates aren't directly tied to the federal funds rate, they are heavily influenced by the Fed's monetary policy and views on inflation. Guys, we're going to continue to stay plugged into what's going to end up happening throughout the banking sector as a result of the SVB crisis and Signature Bank crisis. Certainly an interesting time in economic news, so we'll keep you plugged in. Make sure you're a subscriber to the channel. Drop a like to help us out here. It certainly does very, very much help us, so we appreciate you. Leave your comments below. What do you think is going to happen this spring and going into the summer with the housing market? Are things going to continue to stay slumped, or are we going to end up with a surge of buyers in the marketplace? Look forward to the next video. Until then, make it a great day and keep on cash flowing. Take care.